The futures market is a powerful arena for generating income, offering high leverage and liquidity. With proper education and risk management, earning $50,000 to $100,000 annually is achievable. Futures contracts allow traders to speculate on the price of assets like commodities, indexes, and currencies with a small margin. However, the leverage that amplifies profits can also accelerate losses, making discipline essential. Choosing the right futures market. Not all futures markets are alike. The S&P 500, ES or MES, is favored for its liquidity and moderate volatility, making it suitable for both new and experienced traders. NASDAQ NQ futures offer more volatility, while crude oil, CL, and gold, GC, attract those trading macro trends. Currency futures like the Euro, 6E, offer a slower pace and are useful for diversification. Understanding the market's behavior is key to aligning it with your strategy. Defining your trading style. Your trading style should fit your lifestyle and temperament. Day traders focus on intraday price moves using tools like VWAP and momentum indicators. Swing traders hold positions for several days based on technical trends and macro events. Position traders follow long-term movements and require larger capital. Choose a style that you can execute consistently. Creating a trading plan. A trading plan outlines your approach, including risk limits, entry to exit rules, and position sizing. Risking 1 to 2% per trade protects your capital while giving room to grow. Strategies may involve simple moving average crossovers, price action, or order flow setups. Consistency in execution is more important than any one strategy. Understanding technical and fundamental analysis. Successful traders combine technical and fundamental analysis. Technical tools like RSI, MACD, FIBON, ACCI, and volume profile help forecast price action. Fundamentals such as inflation reports, interest rate changes, and geopolitical events can move the markets dramatically. Being aware of both allows for more informed decision-making. Selecting the right tools and brokers. Use reliable platforms like NinjaTrader, Sierra Chart, or Thinkorswim for analysis and execution. Pair them with reputable brokers such as AMP Futures or Tradovate. Low-latency data feeds from CQG or Rithmic ensure accuracy. These tools are essential for fast and informed trading. Starting with simulation and scaling up. Begin by paper trading to refine your strategy without risking real money. Once consistent, transition to micro-contracts like MES or MNQ. These smaller instruments help build confidence while limiting risk. As your account and skill grow, gradually increase position size. Mastering trader psychology. Emotional control is crucial. Stick to your plan, avoid revenge trading, and treat losses as learning opportunities. Journaling and reviewing your trades regularly can reveal patterns and improve discipline. Use tools like Edgewonk or TraderSync to track progress. Avoiding common mistakes. Don't over-leverage or trade impulsively. Avoid overtrading and stay clear of major news events unless prepared. Focus on quality setups over quantity, and always respect your risk limits. Earning $50,000 to $100,000 from futures trading is realistic with the right mindset, tools, and strategy. Treat it like a business. Plan, execute, review, and grow consistently. Success comes through preparation, not prediction. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.